Time for the latest earnings outlook now with Research Director Shiraz Mian. Shiraz, many of the issues that were on the table front and center that kept kind of guidance to the negative side are not on the table anymore. Not a lot of drama in Washington anymore, for example. That's just one element. So as we begin the Q4 reporting season here, do you see an improving economy equating to better corporate guidance?
That's the hope. That's the hope that the persistent trend that we have been seeing from corporate America, where when it reports results for the current quarter, it guides lower for the following. And we've been seeing that repeatedly for more than 6 quarters now. As you rightly point out, that the internals of the economy are looking up after quite some time, and the hope is that as these companies report, and we have started hearing about that a little bit. Mm-hmm. JP Morgan referred to that. Somebody tried to pin down the CEO that you're cautiously optimistic. Yeah. He said, no, I'm not cautiously, I am optimistic.
Right.
Bank of America referred to that as well. So we're starting to hear about that a little bit, but financials don't provide guidance typically. Guidance comes from other companies, technology, materials, industrials.
Right. So still too early in the season?
Still too early to tell. The pre-announcement season and the pre-announcements from companies are no different than what we have become used to in the last few quarters, meaning that the outlook we have heard thus far from companies continues to be negative. Mm-hmm. So we are not seeing any reflection of the positive or improving outlook for the economy, at least in the guidance we have seen thus far.
Okay, interesting. So let's talk about Q4. Give us an update on where Q4 stands as we speak.
Yeah, so we have, I brought you a few charts.
Pictures, good.
That's right. So this is the scorecard for the Q4 companies as of this morning. 40 S&P 500 companies have reported results, 460 still to come.
And this morning is January 16th, by the way.
And this is a very finance-heavy group of companies that have reported. So for the finance sector, we have, in fact, close to 40% of the sector's total Q4 earnings already out.
Okay.
So the sample size that we have is very finance-heavy. Total earnings growth for this group, 16%. 60% companies beating earnings expectations, revenues up 3.9%. 42.5% beating revenue expectations. How do the results for these 40 companies compare to what these same companies did in Q3 or in other quarters? This chart compares the growth rate for these 40 companies. 16.1% earnings growth, a little lower than what these same companies did in Q3, and a little lower than what these same companies did over the last 4 quarters.
So when it's all said and done, where do you see Q4 coming in at?
Let me get to that in 1 second. The same is on the revenue side, and here's the blended beat ratio. So the blended beat ratio is tracking a bit lower as well.
All right.
When all is said and done about Q4, I would say that the growth rate, expected growth rate that we started with, was the highest of 2013 to begin with. And typically, since 2/3 of the companies come out with positive surprises, I would say that the final growth rate, which I'm assuming you are referring to, would be the best. And I have a chart for you to look at for that as well. And this chart basically shows what happened to estimates in the 3rd quarter of 2013, in the preceding quarter.
Yep.
And you would see that estimates started at 5.1 when the quarter started, came down to 1.1% when the reporting season got underway, and eventually went back to 5.1%. Remember the reference I made to 2/3 of the companies beating expectations?
Yep.
We have seen something similar in Q4 play out. estimates have come down from 11.7% to 6.7% at the start of the season. No reason to think that this quarter should not follow the same pattern that we have seen in Q3 and in the last few quarters. So my sense is that when all is said and done, Q4 growth will be in the 8.5% growth vicinity.
Okay, and how does that compare with full year 2013 growth?
Yeah, full year 2013, about 5.5% earnings growth and about 1.5–2% revenue growth, and margins kicking in for the rest of the improvement. Just one small point about the Q4 growth momentum. A lot of that is coming from easy comparisons from the Q4 2012 period. We had an unusually low level in the Q4 12 period, particularly in finance, but in a bunch of other sectors too. We saw yesterday, Bank of America had a $2.5 billion year-over-year swing in earnings. They had made about $700 million in Q4 12. They made a little bit more than $3 billion this time. The insurers are supposed to do very good too. They don't have to deal with the Sandy-related costs that they had in 2012. So easy comparisons are a big driver of the better-looking growth picture. The overall level of corporate earnings on a quarterly basis has been in record territory and remains in record territory in Q4 as well, but there's not much organic growth in there.
So what about the gap between earnings growth and revenue growth? As we move into 2014, do you see that gap narrowing?
It's all tied, Terry, to the first question you asked me about guidance, where you referred to the improving economic data, and is that showing up in guidance as well? The gap between revenue growth and earnings growth will close if companies see underlying economic fundamentals improving, and we start seeing that in guidance and positive estimate revisions. We haven't seen positive guidance, we haven't seen positive earnings estimate revisions in quite some time. Until I see that, I'm unable to bank on that. But the expectation on the street is that this year is going to be different. And
that's what I'm hearing.
That's right. And all those sectors that were held down by uncertainties and weak demand and all of those things in technology, industrials, and all of those capital equipment sides, they will come back strong in 2014, continue into 2015. Give us double-digit earnings growth, margins will continue expanding, and we'll have strong top-line gains as well.
All right.
I'm keeping my fingers crossed, though.
Okay, well, I know you're going to keep us updated as we go down the road on how this all plays out, and Shiraz does that a couple of different ways other than this video. You can get his latest commentary. It's called Earnings Trends if you visit our website, Zacks.com, if you're not there already. And periodically throughout earnings season, he updates that written commentary. He also gives you his day-to-day thoughts on how the earnings season is progressing in his Ahead of Wall Street column. So you'll want to keep your eyes open for that as well. Until next time, with Shiraz, I'm Terry Ruffalo.